It's an historic and busy year in Washington as the Obama administration and Congress tackle major economic issues and reforms. High on the Obama list of priorities is health care reform. And now that's also high on the list of priorities for the independent insurance agents and brokers of America. We asked Senior Vice President of Government Affairs, Charles Symington, about agents' interest in health care reform.
Healthcare reform is our top issue at this year's legislative conference. It's actually tied for first with insurance regulatory reform, which is our perennial top issue. But it's important for us because it's at the top of President Obama's agenda this year, and it's also the top of the congressional agenda. As I'm sure many have read and heard, the healthcare reform, improving healthcare delivery, is something that President Obama feels very strongly about. It's an issue that is on the fast track, so to speak. It'll get done very quickly. And it's important to our agents because they do serve as one of the very primary private delivery systems for the insurance product. And a little known fact is that, while you mentioned many of our agents are property casualty agents, on average, about 14% of our members' book of business is health insurance sales. So our members have been up on the Hill, the past couple of days, explaining the important role that independent insurance agents play in the sale of health insurance, because it's not just about selling the coverage on the front end. It's also important to note that our agents stand with the consumer throughout the claims process. And I think that a lot of members of Congress and staffers don't yet have a grasp of that. But I do think that our agents' work the past couple of days, it's gone a long way to explaining, again, the important role our agents play.
Healthcare reform may be a priority for independent agents, but it's not the only one. Symington says there's a lot of interest in Capitol Hill these days in some form of federal oversight of the insurance industry. And he thinks this might be the year something is actually done.
The financial markets crisis, coupled with the election results, has created what I've been saying is the perfect storm that could lead to comprehensive reform of the financial services landscape. And of course, insurance will be part of that broader debate. It won't be just limited to insurance, but I do think that along with consideration of securities and banking, insurance will be in the mix. And there's been a lot of talk about systemic risk. That seems to be the buzzword on Capitol Hill these days. And what that means is that you're going to have congressmen and senators taking a very close look at those institutions as well as those products that can pose a risk to the overall system, the overall financial services market. And if you fall within that delineation, then there is a strong likelihood that there'll be federal regulation.
The future of regulation of the insurance industry could hinge on the credibility of state regulators. So what do people on Capitol Hill think about state regulation?
They actually just hired a new president and CEO, Terry Vaughn, who is a former insurance commissioner from Iowa. We have nothing but very high regard for Terry, and she's doing an excellent job over at the NAIC, the National Association of Insurance Commissioners. So I think they have a strong presence in Washington, D.C. As a matter of fact, Terry is now in D.C. as her home base of operation. That was not the case in the past. And so I think they recognize that there's a lot going on insurance here in Washington, D.C. And I think that state regulators have a lot of credibility. When you look at what's happened in the insurance industry and you contrast that to what we've seen in the banking and the securities markets, all in all, the insurance market is operating pretty well, and it's very stable, and particularly the property casualty market. We haven't seen one property casualty insurer insolvency during this crisis. And again, I think you contrast that with the numerous bank insolvencies, and I think that it puts state regulators in a pretty good light.